Hi friends, good morning. Welcome to this month's Indian market outlook and equity market outlook. Uh, let's start with this image. This image shows a lot of things that can be interpreted in a lot of ways. The first image can mean the Indian economy before 90s and अभी कैसे Indian economy जगमगा रहा है because of a lot of reforms. This image can also mean what is the economic conditions all around the world, whereas how Indian economy is still shining due to a lot of reasons. So this image is of Bansilal Stepwell in the city of Telangana. Moving ahead, the news headlines are looking very positive. Railway earnings uh, year on year 16% से बढ़ा है. Tax collections 31% से. Foreign exchange reserves have shown a tremendous growth. One very interesting thing is that right now the 97% mobile phones used in India are made in India, और जो कि पहले 2014 में खाली 8% था. एक और बहुत अच्छी बात यह है कि currently India is the biggest smartwatch market, which means that there might be positive inclination towards health because of the features of smartwatch. India ka electric consumption has increased. There are certain things to worry about, how the manufacturing has shrunk and how the September quarter earnings have been impacted because of the inflation. But over and all, broad based, there are good things. We chinks in our armor, but still compared to the world, we are looking. Capacity utilization is again reaching pre-COVID levels at 17%. So again, this is a very good sign for India. Moving forward, जो cars की supply थी, जो bottlenecks थे, that has been corrected and removed, जिसके वजह से lower segment of the cars have seen a good growth. So this again makes the Indian economy move forward. The farm expected to grow at a good level thanks to a better Rabi crop season. So this again is good for the rural economy. The government has also started spending a good amount of money for the rural. So this will really bode well for the rural economy. Credit growth for the non-food credit industry and retail loan is now at a reasonably high double-digit level. तो ये अगेन एक बहुत अच्छा फैक्टर है फॉर इंडियन इकोनॉमी. जीएसटी कलेक्शंस का तो क्या कहना. आई थिंक 1,40,000 इज द न्यू बेंचमार्क, न्यू लेवल. This has been happening for the last 9 months. Like I mentioned, there are few challenges when it comes. One is the deficit, which continues to remain higher than what we can afford. This also puts pressure on rupee. Let's see how and what we do. Oil as well as non-oil imports continue to remain above our affordability level. Now, one culprit for Indian trade deficit is our trade with China. This year, our imports will cross probably $100 billion, and our trade deficit with China is likely to exceed $87 billion. Now, this is much more than our defense budget. Moving forward, one more concern for India is that our recovering manufacturing sector is fueled by imports. Now, जब तक Indian economy खाली imports पे dependent रहेगी, this will restrict our growth. Moving forward, we need to expand our exports to accelerate our growth. Right now, our percentage is very, very low at 1.8%, and it is much lower than our global share in GDP, which is roughly about 3.4%. So government has launched PLI, and we need export growth to make sure that India still remains the oasis, and so that we can de-risk India's growth. Moving forward to PLI, India government is working very nicely. We need to make sure that it keeps on happening on the semiconductor, automobile, solar modules, etc., so that exports can bounce back and make sure that India's share in the global economy with respect to exports is increased. One concern for India is that despite inflation coming down, it has remained reasonably well above RBI's comfort level of 6%. At the top of the end of the clearly we need to bring inflation further down from the current level. Now again, one good thing that we can be compared to US, that while our inflation continues to remain elevated to our objective, it has remained well below American inflation for 13 months now. And this is an amazing feat because this has been achieved for the first time in India's independent history. Partly drop in inflation or subdueness and inflation is driven by energy correction. Oil prices at back to 80 rupee, 80s. So let's hope and pray that oil continues to fall further rather than bouncing back. The service inflation also has risen as economy has opened up. Tourism, travel are reflecting elevated levels of inflation. The good point is that supply can be created. Companies' capex to deposition ratio for all non-financial listed firms is almost at a historically low level. Clearly, at this point of time, companies have more cash to invest than what they will need. We believe that capex cycle seems to have bottomed out between state, central, and corporate. So capex will revive. This is a very interesting slide. India is already back office to the world. Our service export market is almost mid-single digit at 6%, but our goods market share is at 1.8%. We have to transit from being office of the world to the manufacturing. जैसे चाइना के साथ हुआ, अभी हम बैक ऑफिस है पूरी दुनिया के, बट हमें मैन्युफैक्चरिंग और फैक्ट्री हब बनना पड़ेगा एंड वी नीड टू डू इट थ्रू पीएलआई स्कीम so that going forward हमारी जो growth की trajectory है वो बरकरार रहे. Now coming to the equity market, despite 4 rate hikes by Fed this year of about 75 basis point, Indian equity has continued to rise. Now on 14th of December, there is FMOC meeting, 50 basis point rate is almost discounted. What will be critical is Fed ka stance or Fed ki commentary. India has delivered almost 4 times more return than MSCI emerging market between 2014 to 2003. If you look at 10-year on a 20-year basis, we have delivered about 1.5 times more return than MSCI index. Moving forward, India has made money for global investors, unlike the other markets. Partly this performance is driven by our sustained valuation. Historically, we have traded at a premium to emerging markets, but right now the premium of Indian equities over other emerging markets is almost as high as 139%. This is partly because of the massive outperformance of Indian markets over emerging markets peer. As our performance improved, our weight in MSCI emerging markets has also increased from 7% in 2022, 7% in 2020 to roughly around 14.8% in November 2022. While markets are near all-time high, are at lifetime market high पे है, stock जो time के पास scope to another market जो participation is and just sure वो फॉरेन पैसा अगर निकल भी impact on the market. The same to buy, yeah, they bought 3,000 crores. Is already at 19. Just between foreign flows. मोर इम्पोर्टेंटली रहती है, जब फॉरेनर्स का पैसा चलता है, तो हमने कर लिया है. Now, in comparison to China, we have massively outperformed China for over last 30 years. Chinese MSCI Emerging Market Index has not delivered any good return. Compared to that, India has grown by leaps and bounds. But we believe that currently foreign money can be invested in China, but this will be only due to the technical basis, because abhi China mein the valuation is very cheap and there is potential opening up of the Chinese economy. But again, in long term, the money will come back to India and India will be preferred by global investors, because this is the country where there is the rule of law of democracy is visible. Global investors can take a comfortable long call rather than a technical call of becoming trader in China. So, mota moti, this is how the Indian economy and Indian equity market is looking right now. If I have to say something about 2023, it's that volatility is going to be there. So the best way to make sure that you get good returns is SIP. And like we believe in good money man, the way to grow your money is कि या तो धंधा करो या धंधे में invest करो. Thank you so much. That's it for this month. Thank you.